Welcome to another video. What we will be doing today is performing a full live breakdown in the market to see what kind of potential trading opportunity we can be looking on the specific pair that we will be analyzing. And obviously I will try to keep the analysis as educational as possible so that you will understand exactly which are the key concepts that you have to apply in your trading when you're actually analyzing the market. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform, and every single day I share a lot of free education analysis on all my platforms every day. So I really suggest you subscribe to the channel, and I will see you in the video. The pair that I want to speak about today is EURO-CAD. Now, why do I want to speak about EURO-CAD? Because it is an extremely interesting pair to follow at the moment for a potential trading opportunity. And what we will be doing is, first of all, going over it from a technical perspective. So looking at the monthly, the weekly, and the daily time frame, which, as you know, are the best time frames when it comes to the direction of the market. And we will also check the order flow on the CAD and on the euro to see what the biggest banks and institutions are currently doing on these two currencies, which obviously gives us an edge over our competition in the market. And then we will also go down on the 4-hour time frame, which is the best time frame when it comes to the entry, to see what we have on the pair and what kind of opportunity can we actually be looking for to capitalize on this pair. So let's start our analysis on the monthly, and as usual, I will keep it very educational so that you will learn a lot of key concepts. Now on the monthly, what do we have? We have a market that clearly has just created this overextended W formation. Now after the market creates an overextended W formation, what do you expect? Now in general, every time that you have an overextended W formation, you want to see the market make a move to the downside at least to the previous resistance, now turn support, which is the zone that started the pattern in the first place. Now in this case, this zone here, where is it on our actual chart? Now this zone is exactly this area here, which is the previous resistance that we can see at this area, which is now turned support at this zone. Now what we have here is a market that in fact, after creating the last leg of the W formation, has retraced exactly to that zone, which, as we just said, is the completion area of the pattern. So the market completed the overextended W formation perfectly at this area. Now in general, if you have an impulse in the market and you want to measure the correction, what are you supposed to be doing? You're supposed to take your Fibonacci from the low to the high of the impulse. And by doing that, what you can see that the market retraced exactly to the 50% retracement of the Fibonacci taken on the impulse. Now, why did the market retrace exactly to the 50%? Because what we can clearly see is that the market had the 50% in perfect confluence with the structure, meaning that basically the 50% was at the same area of price with the structure resistance, which is now structure support, which was also the completion zone of the formation and the area from which the pattern itself started. So the market made a retracement to this zone, rejected it with 3 monthly candles, and then started this nice move to the upside. Why did the market start to move to the upside? Because that is how the pattern works. You have the impulse, the correction, and you expect the continuation to the upside at least to start. Going down on the weekly time frame, what do we have? Now from a weekly perspective, the rejection of this level here was very much expected. Why? Because we had a market that after this incredibly strong move to the upside was clearly going from creating lower lows to creating higher lows, and then finally with this break to the upside, higher highs. So from a weekly perspective, it was extremely simple to understand that the market was trying to go higher, and in fact that is exactly what the market did. Specifically, if we go down on the daily time frame, if you remember from my previous analysis, what did I say? I said from here, we definitely expect the market to make a retracement, go and test this area here, and then from here start all this move to the upside. And I will link in the description of this video so you can go and check it out, that previous analysis in which when the market was here, I said that we wanted to see a retracement to the downside and then the continuation to the upside. So you can go and check it out for more free education and obviously for more reference. So clearly the market did exactly what we wanted to see. And then again, what did the market do? Now, last time that we spoke about EURUSD, the market was at this area. And from here, what did we say? We said that we wanted to see the market make this move to the downside. Why did we want to see the market make this move to the downside? Because in all this impulse, there is one candle which is not related to this move, which is exactly this red candle. Now, why is this red candle very important? Because it's the only candle not related, as we just said, but it means that the market respected this zone as resistance in a very strong impulse to the upside, meaning that now that the market is coming from above, we expect the market in the first place to go and test this area because it's a strong demand area inside of which there is a lot of liquidity. So we expected the market to go and grab this liquidity and then reject the zone to the upside. And I will link as well in the description of the video in which I said that from here, the analysis in which I said that from here, we wanted to see the retracement to this area and then the market reject the zone to the upside, which is exactly what the market has done. And now, where is the opportunity? Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or speak about in the next videos. Now, if inside of this area you found a good entry and you're already in the long, then absolutely great job. You're running the trade, which is currently risk-free. So worst case scenario, if the market will go down, you will simply end up with a break-even trade and you will just exit the market break-even. However, if the market from here will continue to the upside, you will have a very good trade with a good risk to reward and good probabilities. But if you are not already in the long, now looking for a long from here is probably the worst thing that you could do because you would be longing in the middle of nowhere. Okay, so you don't have good probabilities and you don't have good risk to reward. So do not long a market in the middle of nowhere. Long from a support level and then you go risk-free on the trade, obviously if on the 4 hours you find good confirmations. So from here, do not look for any longs. So what is the point of the video? Where is the next opportunity for EURUSD? Now, before I show you where is the next opportunity, let's first go and give a quick check at what we have from a COT perspective if we check the Euro and the CAD. Now, what we can see that institutions have been doing on the Euro. Now, on the Euro, we see that we went from 147K longs all the way up to 242K long positions. So clearly a huge increase in the longs that we had from a Euro perspective. So institutions clearly have been aggressively buying the Euro. In fact, net positions went from minus 114K all the way up to plus 157K. So institutions went from having more shorts than longs with 271K shorts and 157K longs all the way up to having more longs than shorts with 242K longs and 84K shorts. And if we go and see what we had from a CAD perspective, we can see that longs increased from 16K all the way up to 32K and shorts actually decreased. So the CAD is definitely being bought. In fact, we can see that the net positions went from minus 35K to minus 12K. So the CAD is getting bought and the Euro is getting bought as well. However, on the Euro, we can see that the move to the upside actually already happened. If we check, for example, EURUSD has been trending to the upside extremely aggressively. Why? Because institutions have been very aggressively buying EURUSD. And keep in mind that if you check the data for the Euro, you are already checking EURUSD. Why? Because all currencies on the spot are already traded against the USD. So clearly Euro, it has been bought already and the market has already reacted to all these longs, meaning that we can actually expect a retracement in all the strength of the Euro because we can expect some profit taking in all these longs. In fact, we have a new report coming out today, which will be very interesting to check to see if institutions actually started taking their profits on the longs, which is something that I look forward to. And on the CAD, we have already seen that they have started longing the CAD. However, we still didn't see the impact of that in the market that much. So this to bring what? If you have already long from here, perfect. Continue to run this trade risk-free. Do not long from here because we might see some profit taking on the strength of the euro. Now, if that won't happen, EURUSD can easily continue to the upside and you're already in a great trade. However, if the market will break this zone to the downside and make this move to the downside, that is where the next opportunity for EURUSD will come, because at that point, what will happen is that the market will have created actually in M formation, retesting very important structure here on the daily time frame, and on the weekly we will have in impulse correction, and the market is supposed to at least try to make another move to the upside, meaning that we have very good probabilities from here to see the market make this move to the upside and complete the pattern at the previous support, now turned resistance. So if the market will actually make this move to the downside, which at the moment we have absolutely no idea if the market actually will or will not, but that is not our case, that is not our job. Trading is reactive, not predictive. But if the market will actually make this move to the downside, then inside of this area, what we will be doing with students, inside of this area, we will be monitoring price action on the 4-hour time frame. If you're asking yourself why, because the monthly, weekly, and daily, as we said, are the best time frames for the direction of the market, but the best time frame on which you can position yourself with a very good risk to reward and probabilities is the 4-hour time frame. So on the 4 hours, inside of this area with students, we will be monitoring price action on the 4 hours, waiting for the market to shift from a bearish to a bullish market from a 4-hour perspective. And as soon as that will happen, we will add EURUSD to our watch list. And then as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the completion of the M formation to the upside, and for the market to give us the continuation from a weekly perspective. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me personally answering every single question that you have every day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in the program.